It's time for us to talk about this. UK interest rates have been raised to 5% by Bank of England. It's battling to control soaring prices. The bank's increased the rate from 4.5%. It's the 13th increase in a row. So what does this mean? What sort of impact will it have on us in real terms? If you've got a question about it, you'll be able to put it to our guest if you call us now, in fact, on that same number, 0800 731 2000. Jerry During is the director of Money A+E and here to tell us more. Hello, Jerry. Afternoon. Thanks so much.
Hi, Kath. How are you?
Well, I'm on a Tracker 8 mortgage. You can tell how I am.
Oh, gosh. No, that's not great.
No, this is, I'm talking about this from a very real position. I made a noise. I made a very guttural noise when I saw the news. I knew it was coming, but ouch, 5%. So, Jerry, let's talk about the impact this has. I mean, I know it has an impact directly on me, but this is an impact on everybody, doesn't it?
Yeah, it does. I mean, so I work for Money A+E, as you said. We're a money advice and education social enterprise, which means that we support people by providing legal advice on debt welfare benefits and giving them money guidance to help them manage their money better. And we also provide education and training programs. We've got a financial literacy GCSE level or NVQ level training program that we deliver in education institutions and in communities as well. And we're seeing lots of people coming in to our services with massive issues around money. And this rate rise is it's really it's just so shocking. And it's going to affect lots of people, like you said yourself, on a tracker, anyone who's got a mortgage right
A
now.
variable rate or a fixed, and your fixed is ending soon.
If your fixed is ending soon and your rates are going to go up to 5%, we haven't seen these rates. In fact, the last time we saw these rates was probably at the time of the financial crisis.
April 2008, before the Lehman's crisis.
That's right, just before then, and we know that a big part of that crisis was due to mortgage problems as well. So, I'm fearing that we're going to see similar issues happening again. But what this means for us, it's not just those who are on mortgages, it's affecting renters, it's affecting people who just can't afford to get on the property ladder. That rate basically means that mortgages are unaffordable. We've seen possessions of buy-to-let mortgages. That means that people are getting evicted and there's a homelessness issue. We've seen that rise by 28% in the last quarter. These are the highest levels we've seen since the pandemic. Also, what you do is there's a lot of mortgage borrowers who also have, as I said, buy-to-let mortgages, and they're passing on these astronomical costs onto their tenants. So what you're seeing is massive rises in the affordability of rental property.
Jerry,
so
I heard.
prices are going up so high.
Apologies for interrupting. I heard someone reference the fact that in society, a third of people own their house outright, a third of people rent, and a third of people own their house with a mortgage. And that kind of, for me, really does illustrate how much of an impact this can have, because 2/3 of society rely on somebody else or themselves having a mortgage.
Exactly. It is really real in terms of the massive impacts that are happening. We could be seeing another crisis like the financial crisis just around the corner with rates like this. But basically, it's in London, the clients that we're seeing, rents are now almost 40% of the income that they have. Once they've spent that, they've only got a little bit left over with the rising cost of all the other household bills. It's just really, really shocking. And it's such a crazy situation.
Yeah, because
There's not
again,
enough.
if your landlord comes back and they're breaking the contract and they can do it, they can raise your rent and you're out.
You're out on your ear. And like I say, this is going to be leading to what I feel is essentially a homelessness crisis. I've talked about those rising possession rates. We know that rents are mortgages are unaffordable, so people are choosing to rent now. So you've got an increasing rental sector. That third that you mentioned is probably gonna increase soon to be a lot more because people can't get on the property ladder. They have to rent. The costs of renting are so high. Social housing, which is more affordable, there's just not enough of it out there, and lists are forever for people to wait on. So they can't get into social housing. So
Jerry, I'm going to ask you to pause there because I want to bring in our other guest, Henry Pryor, an housing expert. Henry, welcome to the programme. Afternoon.
Good afternoon to you.
Listen, we were just talking with Jerry During there from Director of Money A+E, and he's mentioned housing and this potentially precipitating a homelessness crisis. That's not hyperbole. That's not exaggeration. That could happen.
It could happen, but I don't think it will happen. And I'll tell you why. I think that what we've all tend to lose sight of when we're understandably very, very concerned about the sort of news we're seeing coming from the city and from the Treasury in particular, is that we are expecting to see, as you phrase it, homelessness, people sleeping on park benches, sleeping under hedgerows. But the ingredients that could bring that about don't currently, as things stand, exist. And I'll explain why. The government and the Bank of England in particular are using what is traditionally a very familiar, if blunt, tool from their toolbox to try and bring inflation under control. And they are ramping up interest rates in order to stop people from spending money in the high street. Now, there are lots of people who are going to, because that's the purpose of increasing the rates, find life incredibly difficult. And it's no doubt that, as you're talking about, renters are going to feel that heat even more than homeowners. But mortgage holders have been, by and large, stress tested to the current limits, and they are, albeit painfully, putting up with these higher interest rates, are not going to be either thrown out, repossessed, or selling up and having to sleep under a hedge.
So yes, this is an important point. What you can do if this interest rate either impacts you immediately or in the near future, in terms of you being a mortgage holder, the banks are primed to be kind this time. Because I can remember sessions in the 90s and people having to, foreclosures essentially, Henry.
Yeah, you're so right. And I think that what's important, again, to remember is that the banks, by and large, have only just been readmitted into polite society after the chaos caused, frankly, by them in the global financial crisis of 2007 and 2008. They do not want to be held responsible for turfing people out of their homes, and they will do pretty much whatever it takes to ensure that the finger is not pointed at them for the sort of catastrophe that otherwise, you're quite right, could be visited upon us. They're going to allow people to go on to interest-only products for a period of time. They're going to allow mortgage holders to extend the term of their mortgage, perhaps. There's lots of things they can do, lots of things that the government and the Bank of England behind the scenes will hold their feet to the fire to ensure that they do. But at the end of the day, I think that it's probably people who have to rent properties who have seen rents increase by 20% over the last 3 years since the last general election, who are feeling exactly the same sort of pain that mortgage holders are now understanding, and who have not, by and large, been bailed out by the government or had the kind of sympathy that I think many would argue they were due.
Okay, now I'm going to bring you back in on this, Jerry, because you are talking to people who are living through this and trying to, I'm sure you both are. Jerry, again, we're hearing this will potentially have even more potential pain for people renting. But it impacts everything, because we know the price of food is high. If rents have gone up by 20%, if you're using 40% of your income, how on earth are you surviving to be able to pay for bills and buy food?
Well, this is a big problem. I mean, luckily we may be able to support some of those mortgage lenders, but it is affecting those renters. We're seeing demand for rents outstrip the supply of rental properties for people to go into. And this is having a massive effect. What we're seeing coming through our doors is this, what I'm calling a mental health epidemic, essentially. We see 77% of our clients are coming in with health issues related to their debts. Their mental health issues are getting even worse. And what we're seeing is that almost a third of those clients that are coming in with health conditions are also experiencing problems with their debt. The Money and Mental Health Institute, which Martin Lewis started, actually shows that 86% of those who have debt and a mental health issue have reported that their debt issue is getting even worse. Sorry, their mental health condition is getting even worse. And even worse still is that basically those people are seeing that suicide essentially is a reasonable and good option. So this is a really serious issue that we really need to take seriously. We need to do a lot around it. Clients are coming in, mental health issues, there's lots of stuff that's happening there. What I would say to people, if they're finding that they're in a situation that they need help, is to look out for some of these warning signs. So firstly, are they missing mortgage, rent, or household bills? That's the first thing to look out for. Is their income much less than their expenses? And are they basically falling into arrears with many bills? Are they not sleeping? Are they less productive at work? Are they feeling anxiety? Is there disputes with their partners at home? These are the kind of things, and I would say if anyone is experiencing that, they need to reach out and get support. It's not all doom and gloom, though. What I would say about Money A+E and the organisation that I represent is, you can check us out on Google, is that our expert team, we're an organisation based on lived experience. That means that our advisors are expert and professional, but they've got lived experience of the issues that our clients are facing around debt and exclusion as well. They're expert, they do some really brilliant work, and it's professional, compassionate, and will provide lots of brilliant support for people. Just to really talk about the service, we've got some statistics that's done through independent evaluation, which has showed that clients who come to us, their well-being and mental health is 58% better off up to 2 years after they've engaged with us. We're putting over £750,000 back into people's pockets when they come and talk to us, and we're helping them deal with over sort of £2 million worth of debt. And that was just from a relatively small team working over the last year.
Oh, Jerry, it sounds like incredibly, Jerry, it's definitely important work. I want to bring Henry back for a second. Henry, hearing that, obviously there's really scary potential impacts on people going through it. If I ask you about the wider aspect, should we, and I'm going to ask Jerry in a moment as well, should we be expecting the government to intervene in some manner, or is it because this is about stopping spending and they haven't really got much they can do other than wait for the Bank of England to increase interest rates? What can we expect the government to do to help?
Very little. I mean, thank goodness for organisations like Jerry's and others who are there providing the safety net that many people, I'm afraid, naively assume the state provides. We don't, despite this being the 21st century in the United Kingdom, with everything, all the wealth and riches that we have at our disposal, our ability to look after each other is woeful. But I'm afraid the government has mandated some medicine that is going to be unpleasant, and it is going to be painful for a lot of people. And for some people, it will, I'm afraid, tip them over the edge. But it is better, it is thought, than having rampant inflation, which is something that is a ghastly thing to witness. If you're old enough to have witnessed it previously, you will know only too well. But I'm afraid the idea that the government is going to step forward and bail out those that it is trying to squeeze in order to squeeze out the inflation, I'm afraid, is not something that we're going to witness anytime soon.
Henry, stay there because I want to check in with Jerry on this. Should the government be stepping in, Jerry?
Yeah, I mean, what we're seeing is something, we're calling it the ethnicity premium. And what this really does is it basically talks about this poverty trap, this cycle that we're seeing where people are in a kind of debt and poverty cycle. And as I've said, issues affecting diverse ethnic communities, which are the sorts of groups that we work with, and young people and those with medium to low incomes, they're feeling the pinch even more. And as you mentioned, Kath, you can see that this is affecting maybe 2/3 of the population. As a part of trying to combat this ethnicity premium that we're seeing, where it's having an impact on mental health, on household incomes and housing security, and also in terms of poverty and mental health and health conditions, we do want to work with the government, and we think there is things that they can do. Working with government, working with industry, we are trying to look at different things that can be done to really support people at this time of really difficult situations.
So, right, if somebody, Jerry, I'm running out of time. If somebody's struggling in particular right now, Money A+E is available to them. Is that right?
So what I would say, yes, I said we've got our empathetic advisors who have lived experience of debt. They can support people, and what they will do is help people deal with a variety of these issues. If you Google us, Money A+E will come up. Got our contact details. You can contact agencies, contact us. There are other agencies out there as well, like Christians Against Poverty, Step Change, and also Mind, to really support those with those mental health issues as well. But the debt issues, Step Change, Christians Against Poverty, CAB, Money A+E as well. We can definitely support people. What I would say to people is they're getting any calls from creditors about missed payments and they're feeling that pressure, they need to pick up the phone, speak to an agency like ours. If they're getting these calls and don't know what to do, I think they should be basically saying, look, I'm going to seek some professional money and debt advice from an agency, and we will be back in contact with you. And they should go on Google, contact these agencies. Like I say, there is light at the end of the tunnel and there is support that can be offered. But yes, unless we're working with government and we're working with industry to really look and really, we need to mitigate the impacts this is having, because this is going to be a massive social problem that we're going to have if we see the types of issues that are coming up all the time.
Okay. So, thank you, Jerry. We appreciate that. Henry, again, just to add to what we were hearing from Jerry, if someone's having a housing issue, same difference. They need to explain if they were in arrears. They need to call the bank. They need to call. If anyone calls them, they need to explain what's going on.
Or whatever else you might consider doing, call your lender, speak to your bank or your building society or your mortgage broker if you have one. If you can remember the old Busby advert, it's good to talk. It will stop the pain. It will help. You'll find people who can help you if you are having the kind of frustrations we've been talking about. And there are organisations like Jerry's there who can pick up the pieces as well. But talk. That's the advice.
Yes, do not be silent about this.
And don't be big and brave.
And also, I know it's horrible, and opening those letters, don't let letters go unopened. Open them, work out where you are, and CAB and Money A+E and all these other organisations may be able to help, but there's always a way forward. Yeah, absolutely. Henry, we're so grateful to you for your contribution, and of course to Jerry During, the director of Money A+E there. Obviously, Jerry mentioned very serious mental health issues, consequences for struggling, and I'm going to mention if you're going through something like this and you need to speak to somebody, Jerry mentioned Mind. I would also mention the Samaritans for free. Call them for free at any time, any phone, 116123, or email jo@samaritans.org. Okay, I would urge you to reach out and talk. I think Henry put it beautifully. It is good to talk. It is important to talk. And I know that today's news may not have an instant impact. You may not be in a situation where you see it and think, well, okay. But where we thought this was going to be something that maybe short term, inflation would come down, those interest rates could creep down a little. I spoke to a mortgage broker not that long ago when I was thinking about what I could do. And he said, oh, no, you know what you should do? Just hang on. Don't change anything because you're on that great tracker. It will come back down again. But that was before we saw core inflation as high as it is and not going down. So now the experts, as they may be at the Bank of England, have decided it goes up again by 0.5 percentage point. That can be massive if you rent. It can be enormous if you've got a mortgage. So again, if you want to and you're feeling like you can share your situation with us, please feel free to do that. Give us a call and we'll talk it through. And we may even be able to put you in touch with Jerry or Henry and get you some advice. But we'd be very grateful if you feel like you could share it with us as well. Okay.